Hi and welcome to the Price Action Analyst YouTube channel. This is Tesla, TSLA. I'm sure everyone has heard of Tesla. I'm gonna try and give an opinion on Tesla. I just want to point something out first. I always like to have the Bollinger Bands. I never used just Bollinger Bands on their own, but I like to have them on the chart. I can't, if anyone knows how to put the Bollinger Band around the price action on Koinigi, it would really help me. I can put Bollinger Bands, but for some reason they're at the bottom of the screen. When you see these things, hit them short on the retest. So, when price does that, frame up the price action like this, frame that wick, and when price gets back into that wick, hit a short. So I don't really like trading naked options anymore, so I would have hit a put debit spread. So I would have bought a put and sold a put somewhere. Depends on how thingy you are, but they're reliable over and over again. That's selling pressure. So you've got a wick and it's outside of the Bollinger Band. Hit that short. It's not going to work every time. There it didn't do much, but that's nowhere near as pronounced as that. Those are free kicks, especially on a $1,000 stock. So, Tesla is really just a rocket ship. You've got push up, retrace, another push up. So, price is outside the Bollinger Band, but it's hard. It's very hard to ignore this strength up, and the strength is the strength is going to act as support. This hold on for a second. So even though price is, this looks like where the Bollinger Band fails, when price pushes outside and then just keeps pushing up, and you can see that's a strong bar. Even though that's red, it's a wick that shows strength, and this bar is forming a wick. So you might get a retrace here, but I wouldn't just fade the trend here. Even here's a good example, right? It's outside, but if you faded this, price didn't go too deep, it's still fighting this uptrend. So what you want to hit is the retest. That's a much better place to get short. Don't just fade this here, because you will get weakness, but it's the trend is still your friend, I guess. You want to hit the retest of that. So overall, price is very bullish. Expect some sort of a retrace here, but expect it to be shallow. And all of your areas of strength are going to be any wicks. So this wick here, your price is washing it, but expect price to move up because this wick is acting as strength. Each of these gaps is going to act as bullish strength. So, watch price come here, watch strength off of that, watch strength off of that. So, here I would wait. So you either want to wait for a buying entry signal here. If you don't get one and price pushes back, watch here for substantial buying to get long. a really risky place to get long. Like I just don't chase price anymore. So, but if you were like, hey, I've got to get long this stuff. If price like gaps up tomorrow, or opens here and starts to push higher, and you get, say, 2 consecutive, say, 10-minute bars that with higher closes than that, you could try to get long there, but it's really risky. Like price, again, I don't just use a Bollinger Band. I won't just go, hey, price is outside the Bollinger Band, I'm going to get short, because stuff like this happens. But this won't go on for too long. Look historically at step outsides the Bollinger Band. They don't last very long. And you want to get long. Everyone sees that and scared that they're missing out, but I wouldn't do it. You stop doing that early on in a trading career because you get burnt. I'd much rather just go, all right, my premise is I have a bullish premise, and I'm going to wait for an appropriate place to get long, and you will generally get a retracement. So like here, you will generally get a retracement, and then you're looking for an area to get long if you can. And you might have to use, intraday bars to do that. So let's try and find this area on the hourly bars. I don't know if we can do it on the hourly bars. Hold on. So what are we talking? The 2nd or the 4th? No, it won't let me go back that far. So all I was gonna do was look at, come on. All I was going to do was look at this on the intraday, like hourly bars, and you would have found that you could have, picked your entry point. Your entry point's generally going to be like a 50% retracement, which this was. Halfway is roughly here, so it went a little bit deeper, but you might have been able to pick an entry point on your let's say hourly bars or half-hour bars or whatever, and then because you always expect a 50 retracement and a push from a strong leg up like that. So that's what I expect with this one too. But there's a place to get long on that retracement, and there's a place to get short. So if you happen to get long here, you want to be exiting on inside this wick, because that's the other high probability thing is for you to get short there. So that's how I would play this here. I would expect, this is what I expect out of this. I expect, and very roughly, it's not going to be exactly like that, but that's the high probability expectation there. Remember, it's high probability. It's not always going to do that. Tomorrow you might get a buying bar here and it's on its way again. That's possible too, but this, like I said, this step outside of the Bollinger Band, it's not going to last for very long. So how does it not last? It forms a retracement, and then you look to where that retracement is going to experience buying pressure. And then when price gets to these levels, you watch it on the intraday bar. Say, if it's close, you might even watch it on, say, 10-minute bars or 15-minute bars, but you're looking for buying strength. And again, I can't explain everything in the video. You have to know what substantial buying pressure looks like, right? It's if this is your price action, that's a substantial buying bar. If this is your price action, that is a substantial, it's more because that's in the right place. That's definitely a substantial buying bar relative to this. So you have to know what you're looking for. But you know, if I go long here, I'm also probably looking to exit here. Like if I'm watching price here and it gives me a dirty big wick, I'll exit there. That's my move, right? So again, a lot of those stuff that I make is a relatively short-term projection. Like I can't predict what's going to happen when price. I know that this is high probability, but when price gets here, I really need to see what price looks like to tell you what I expect from there. So that's my Tesla review. That's probably a little bit long-winded, but I hope that's helpful. If you have any sort of questions after watching this video, or if I haven't made something clear, please let me know. I mean, I've been trading short-term for a while, so I guess there's probably a lot of the stuff that I just assume that you have to know, but at the same time, I can't explain all the nuances in a video. But that price action's very strong. That would be my expectation of what price action's going to do. It would be something like that. And again, you trade it with that expectation, then you need to see certain things there. If it doesn't do that, you know, if it keeps roaring out of here, then yeah, you can trade that, but it's high risk, because again, this doesn't happen for so long. And again, we're talking about a $1,400 stock. And that stock, you know, again, fine, it was a COVID crisis, but that was $300 not too long ago. So, you know, that, how long's that run gonna last? You've got 1, 2, 3, 4. You're in the fourth leg now. So, you know, I wouldn't, you know, if I would be very hesitant to go long here, and if I do go long, it's preferably here, and it's a short-term long. So anyways, I hope that helps. I appreciate the request. Please like and subscribe to the channel, and please follow me on Twitter @PriceAnalyst. Much appreciated. Thank you.